So this is what I want to do. I want to underwrite this deal. This is a multifamily deal here in Florida. I want to underwrite it in less than 5 minutes. I could probably do it in 2, but I want to keep it slow and I want to keep it methodical for you guys, because I think what's happening is a lot of us are getting held up on underwriting the deal to determine the true value of a piece of real estate, right? So let's keep it simple. Christian, how many units is that deal?
This deal is
Should be like yeah, there it is, right there.
327.
So 327 units, and then what are the in-place average rents on this thing?
2,112.
And look, this is lease rents per foot, right? So this is in-place lease rents, 2,112. And I'm going to go back to the rent roll and I'm going to confirm that that's actually the rents in place, because I want to make sure that I'm verifying everything. These are the most important numbers. What you put in is what you're going to get out. 327 units. I'm going to times that by 2,112. So get out your calculator. 327 times 21,112. I come up with 690,624. Now that's per month if every unit was leased in, that's not the case, right? But everything is operating in 12 months. So what I'm gonna do is I'm gonna do 12, I'm gonna times it by 12, and I'm gonna end up with 8,287,488. Now this property is in Fort Myers, so it's probably running at like 93, 94%. Some people want to write it for 95, but I know that market over there is probably running at like 93, 94%. So let's just use 93. I'm always underwriting conservative, right? So 93% on that deal is going to be $7.7 million. In these bigger properties, what you have is you have a thing called other income. It's the pet fees, it's the application fees, it's the bad debt, it's the valet trash, it's the parking, it's all of that other stuff that people charge. And then it's also the utility reimbursements that comes into other income. Typically it's around 5%. So I take this number, literally I just take this number and I times it by 1.05, and I end up with my number. My number, this is my total income. So total income is 8,092. And in Fort Myers, this is what you guys need to understand. When you guys underwrite deals so many times over and over and over again, you have to get the expense ratios in your marketplace. Typically, in the East Coast of Florida, it's like 45, sometimes 50%. Typically, I run it at 45% expense ratio, meaning you're keeping 55% of the top line. That's going to equate to your NOI. This deal over here, because taxes are different over on the west coast of Florida, you know, you're talking about Panama City Beach, Tampa, Sarasota, Fort Myers, all these like Naples, the taxes are different over there. They're less. And so typically I've seen between 35 and 40%. Let's be conservative. Let's just say it's 40%, right? So for 40% is the expenses. So you're going to keep 60% of this number. So I'm just going to times this by 60%, and I'm going to end up with a NOI, which is net operating income. NOI is simply just total income minus expenses equals NOI, net operating income. I always say this: you live and die by the NOI, because that's the most important number. If you can get to this number, the NOI, and you can figure out, okay, well, what cap rate are these trading at? There's many factors that go into what cap rate deal's going to trade for. The biggest one is debt, but the other one is, what are you willing to pay that I'm not willing to pay for the yield coming in off the deal, right? Well, I know in this market, and this deal has a little bit more additional information that it has assumable debt, so you're going to pay a little bit lower cap rate. But let's just say in this marketplace, you're going to buy this deal for a 5 cap rate, right? All I'm going to do is I'm going to divide this number, 4.8, because that's my NOI, by a 5% cap rate, and you're going to come up with a value of right around $98 million. So it's 97, 98 million bucks, right? So $98 million is the value of this deal, and I flip to the next page. So $98 million, this is the first thing I always do. So $98 million, how many units is there?
327.
327. So I divide it by 327, and you ask yourself, okay, I'm paying $296 per door, 980, and the rents are $2,100, right? It doesn't quite meet the 1% rule, but if you guys think about this, in multifamily, the more you buy, the more scale you get. You don't have to hit the 1% rule in order to achieve the cash on cash that you and also your investors desire. So I took a little bit longer to explain to you kind of what I do, not really kind of, but I explain to you what I do in this underwriting, but I want you guys to keep it simple. All you need to know is the number of units, the rent that actually is in place, not the pro forma, the rent that's actually in place. You times that, and then you times that by 12, because everything in real estate is over a course of a year. Then you have to know the occupancy. Then you got to know the expense ratio, and you are going to end up with your NOI in less than 2 minutes. You live and you die by the NOI. So once you get the NOI, you can feel confident enough to say, hey, you know what? These deals right now are trading at a 5 cap or a 6 cap or a 7 cap. And how are you going to know what cap rate they're going to trade at? Well, this goes back to asking the broker, asking the people in the marketplace, hey, what are other people buying for? What are deals trading for? Like, you have to ask these questions. You're not going to have all this stuff stored in your memory. You're not going to wake up and be born and say, hey, look, I know what every market cap rate's going to trade for. You have to ask the brokers. You have to ask the experts, so that way you can make a real offer and the people actually take you serious. Hope that helps. Ryan Tseko 10X. This is what we do.
Boom.
Boom shakalaka.